What if your rental property was printing money every month, but the IRS saw nothing legally, cleanly, and by design? That's not a loophole someone stumbled onto. That's depreciation. And it's one of the most powerful tools hiding in plain sight inside the tax code. Here's the thing most people don't realize. The government actually lets you pretend your property is getting older and losing value, even while it appreciates in the real world. It's like writing off the wear on your shoes while your shoes somehow become worth more every year. The IRS assumes a residential rental property loses its value completely over 27 and a half years. That's their number, not yours, not your accountant's. So if you buy a rental property worth $200,000, you can write off roughly $7,273 every single year, whether the roof leaks or not. Now, let's say your rental brings in $1,200 a month. That's $14,400 a year in gross income. After mortgage interest, property taxes, insurance, repairs, and management fees, your taxable income might already be razor thin before depreciation even enters the room. Then, depreciation walks in and just sits down on whatever's left. Suddenly, your profitable rental property, the one cash flowing every month, shows a loss on paper. And that paper loss is exactly what the tax code rewards. This is where the optimism kicks in, but so does the fine print, because not everyone gets to use these losses the same way. If your adjusted gross income is under $100,000, you can deduct up to $25,000 in passive losses against your regular income. That's the sweet spot most early investors live in. But earn over $150,000. And that benefit phases out entirely unless you qualify as a real estate professional, which is the IRS's way of saying this is your serious, documented, full-time world. That designation is a game changer, but it comes with strict hour requirements and record keeping that would make your accountant either excited or exhausted. Here's the misconception that trips people up the most. They think depreciation is free money, a permanent erasure of taxes. It's actually a deferral when you sell. The IRS recaptures that depreciation at a 25% rate, which is their polite way of saying, we remember everything. The sophisticated move, the one seasoned investors actually use, is a strategy called a 1031 exchange, where you roll proceeds from one property into another and keep kicking that tax bill down the road indefinitely. Some investors have been kicking it for decades, building entire portfolios while the IRS patiently waits at the finish line. There's also something called cost segregation, which is basically hiring an engineer to reclassify parts of your building, appliances, flooring, landscaping into shorter depreciation schedules of 5, 7, or 15 years instead of 27 and a half. That accelerates your deductions dramatically in the early years, which is exactly when cash flow is tightest and every dollar of tax savings hits hardest. The practical lesson from every investor who's done this well is simple. Don't let the tax tail wag the investment dog. You still need a good deal, a real market, and a property that cash flows. Depreciation is the reward, not the reason. Process matters more than cleverness here. And that means building your team before you build your portfolio. A CPA who understands real estate, not just one who does your W-2 every April. The difference between a general accountant and a real estate savvy one can literally be thousands of dollars a year in taxes you didn't have to pay. What's quietly beautiful about this whole system is that it rewards patience and consistency over brilliance or timing. You don't have to be right about the market every year, you just have to stay in the game long enough for the math to work in your favor. Depreciation won't make you rich overnight, but it will let you keep more of what your properties earn while you sleep, which is the whole point of passive income in the first place. And if the rules change, if Congress tinkers with the tax code, a disciplined investor with a good team adjusts. They don't panic because the strategy was never built on one trick. Whether you're trying to understand depreciation, find your first rental, or get connected with the right lender to make it happen, check out our links in the description below and let us help you take that first step.